Hello and welcome to Free World Investing. Today we're going to be going over the CRSI, which is the Connors Relative Strength Index. It's a little bit different than a normal relative strength index, which the normal relative strength index is also a measurement of momentum as long as with the Connors RSI. And Connors RSI is close to a short-term relative strength index. So I'll show you what I mean. So I'm going to go to relative strength index. And Connors RSI is really used to get short-term changes, although you can find long-term changes on it as well. So we'll change this because the normal RSI normally uses a length of 14. And we'll switch it to 3. Now when we switch it to 3, it looks very familiar to this chart. Now the difference between the Connors RSI is it takes consecutive ups and downs for 2 and the average of the past 100 periods rate of change into the equation as well, which kind of smooths it out a little bit. Well, not really smooths it out. Actually, technically, it makes it more volatile, but it lets you see more overbought and oversold areas compared to the rest of the 100. So it takes short-term and long-term lengths into the equation as well. So a lot of times, like right here, we can see overbought, and then it comes down. And also one of the big things is when you're in a trend with the Connors RSI, it will bounce off around the 50. So we can see right here, boom, back to 50, boom, down, back to 50, boom, down, back to 50, boom, down. So that happens a lot. Unlike with the RSI where we just sit there hovering below the oversold areas. So that makes it a little bit different. But it's just like other momentum indicators. It is you do sell by the overbought and oversold. This one just catches movements a little bit faster than the other ones. And a lot of that has to do with the fact that it's set at 3. And like I said, it does take into the rate of change of the previous periods as well. Like you can see right here, we were oversold before this movement even began. So sometimes you have to wait for these signals and use other signals as well to get really good trades. And a lot of times this is just good as a confirmation tool along with the other RSI. And you also trade the crossovers as well, because crossovers means that it's going back down to the downside, or coming up to the upside. So a lot of times you can trade these as well when it's crossing over instead of just waiting until here.